Hi and welcome again to the Markets, Trends and Profits channel. Today I wanted to focus on gold and silver price charts, which both look very interesting, suggesting tactical buying opportunities. In the medium term, over the next few months, I believe that we could see some very significant price events in both precious metals. First and foremost, I base this purely on my reading of gold and silver price charts, but towards the end of the video, I will also address some unprecedented anomalies in the global markets, which could constitute explosive rocket fuel for gold and silver prices. Now, if you are new to chart analysis and you're unsure about it, I'd encourage you to see some of the videos I posted since I launched this channel. Like this one, when I warned my readers that Bitcoin, which was trading at $51,000 at the time, was due for a sharp correction, or this one, which I made 2 months later when I suggested that Bitcoin was a buy at $32,000 and that it could rally back to $50,000 shortly before it rallied, well, just about to $50,000. I have coded the knowledge and experience that goes into this type of analysis into the iSystem, an AI model I have now used for nearly 20 years. iSystem scans more than 200 different financial and commodity markets, performs analysis of their price fluctuations, and generates consistent quality trading signals. The advantage of iSystem is that the model is completely reliable. Unlike me, it never forgets, never loses focus, and never gets distracted or emotional. iSystem has enabled me to consistently outperform my strategy benchmark throughout my hedge fund career, including the world's leading blue chip managed futures funds. Today, this same quality of decision support is available in the form of daily trend compass reports, which are available on subscription, starting at €100 per month. For further information about iSystem Trend Compass reports, please visit our website at isystem-tf.com, and I will provide a link in the description below this video. So, about gold and silver's price charts, let's begin with silver. For nearly 8 years now, it has not trended much, and this has made silver a very difficult market to trade. The price chart itself is not easy to read apart from the change that happened on the back of last year's sharp rally and the subsequent consolidation that has now lasted a full year. If we zoom into this interval, we can see that silver did start discretely trending from the end of 2018. This trend was interrupted by the sharp crash in March last year, but from there silver has bounced back and rallied to nearly $30 an ounce. Over the past 12 months, silver has fluctuated sideways, bouncing repeatedly below the horizontal resistance level at about $27.50. Then through May and June this year, silver price remained almost glued to that resistance level, making it look like it wanted to break out higher. In one of my Trend Compass reports at the time, I commented on this situation and I warned my subscribers that it is never a good idea to trade in anticipation of market moves because they frequently fail. Having studied markets for over 25 years now, I've learned that it is usually more prudent to wait for the anticipated breakout to happen or to wait for a pullback if the move fails. Well, silver's push against the resistance at $27.50 did fail, and now we've had a substantial pullback which had reached the very bottom of its horizontal consolidation channel at about $23. Over the last 3 weeks, it has also completed a small double bottom formation, which could signal that the pullback has run its course. This all suggests that silver is a good tactical buy. Its upside could be wide open, and on the downside, you can set a stop loss below $23. Presently, silver is trading at about $24 and the top of the consolidation channel is close to $30. So, this trade may offer $5 to $6 in profit potential for $1 or $2 of downside risk. This will depend on how deep below this channel you place your stop loss level. Keep in mind that it is not usually a good idea to place it too close below the support level. If you're too tight with your stop losses, you'll often see them triggered just before the market rallies where you hoped it would, just after it threw you overboard. So be judiciously generous. At this juncture, I'd place the stop a bit below $22.50. Turning to gold, we have a much clearer picture. Gold price has trended higher since 2018, gaining some $800 per ounce when it peaked last August. Since then, the trend has stalled and consolidated. If we zoom in, we see that gold has formed a downward sloping channel, but with a rather weak support. Drawing the lower channel line is tricky, and I chose to project it at the level where the price bounced the most times, which is about here. Well, in general, these downward sloping channels tend to have bullish implications, suggesting that the previous trend will likely resume at some point. What is more encouraging still is the fact that this year each significant correction has found higher support, which suggests that selling pressure is being overturned by buying pressure at higher and higher levels. This could be an indication that gold is gathering momentum to resume its upward trend towards new price highs. However, having said all that, I must also point out that unlike silver, gold chart hasn't produced a clear buy signal at the current levels. It is still fluctuating in the middle of its consolidation channel, and for now it's probably better to have a clear breakout from the current pattern or to buy into a major pullback. Gold prices are still vulnerable to flash crashes, as we have seen just 3 weeks ago when in the space of 1 hour somebody dumped $4 billion worth of gold, some 24,000 COMEX contracts. I don't want to read too much into that, but there are interests in this world who are keen on keeping gold prices under control, so the risk of sudden sell-offs and flash crashes is a reality, and it's better to tread cautiously. To conclude with the chart analysis, silver looks like a high confidence buy, while gold looks like we should still wait and watch for the time being. But I did want to address some market anomalies which could see gold and silver prices explode much higher at some point in the near future. Namely, we are now facing a confluence of a number of factors, all of which are compounding uncertainty and volatility in many global markets. In my last video, I discussed the recent events in Afghanistan and their implications, which are certain to have very far-reaching consequences. Some of these are already unfolding at a great pace. For reasons that go beyond the scope of today's discussion, I believe that the future will see much higher interest rates, higher inflation, rising uncertainty, and rising commodity prices. Another important factor is that since the 2008 financial crisis, the leading central banks around the world have been flooding the economies with liquidity, but most of this new money has flowed into traditional asset classes like stocks and bonds, and these have reached all-time highs in many markets. At the same time, commodity prices have remained relatively depressed, dropping recently to an all-time low relative to stock prices, as you can see in this chart produced by the Felder report. But even within the commodities complex, the precious metals have themselves been relatively depressed and recently hit a 13-year low, as the following chart illustrates, courtesy of Crescat Capital. Relative to historic norms, the current market conditions do seem very anomalous, suggesting that we could see very significant price readjustments in the medium to long-term future, and these events could prove more extreme than what we've experienced in the past. Here's why I think so. In the grand scheme of things, the market for gold and silver are relatively small. Estimates vary, but the full market cap for all the commercial gold in the world is between $5 and $6 trillion. Here's how they arrive at that number. The world's entire inventory of gold, all of the above ground physical gold, is estimated to be about 5.7 to 6.1 billion ounces. At the current prices of just over $1,800 an ounce, that's between $10 and $11 trillion. But about half of this gold is in the form of jewelry, so it has no commercial use. Therefore, the remaining half, between $5 and $6 trillion, represents the full market cap of all the commercial gold in the world, an amount that is dwarfed by global equity markets, which have now reached nearly $120 trillion. Most of that is controlled by the global shadow banking system, which is estimated at about $200 trillion. Because gold and silver have remained relatively depressed compared to other commodities, and even more so relative to stocks and bonds, precious metals have not been very popular with investors. But when this changes, and when the markets again acquire an appetite for gold and silver, we could see very substantial price changes. This massive pool of liquid assets that's been flooding into one market after another partly explains some of the explosive price increases we have seen over the recent years. Well, to begin with, it explains the stock market. Here is the long-term chart of the S&P 500 index. Nasdaq looks the same, only even more extreme. Here's the example of cobalt. For years, its price went nowhere and nobody talked about cobalt much. But then in 2016, cobalt started trending higher, and when investors decided cobalt was a thing, its price skyrocketed, nearly quadrupling in less than 2 years. We saw something similar also in rice futures last year. Recently, we saw similar, if less dramatic, examples of these same events in many other markets, including natural gas, coffee, aluminum, and even the prices for containerized freight, as you can see in this chart. Another fascinating case last year was the lumber futures. For 25 years, lumber prices have fluctuated between $200 and $400 per 1,000 board feet. That's been a very stable range. But in 2016, lumber prices started trending and reached new historical highs at $600. After a sharp correction, it resumed rising in a trend that rapidly went vertical, adding fully $1,200 in 1 year's time. Lumber prices came back down almost as quickly as they went up, and so did actually the rice futures, but the point here is that over the recent years the markets have increasingly been manifesting very sharp extreme price events that seem unprecedented and could not have been predicted in advance. Here's what Bitcoin price looked like midway through 2020. Just a few months later it looked like this. Who knew? But again, we did see a trend gradually forming through 2020, and when a critical mass of investors decided they wanted to get into Bitcoin, the trend sharply accelerated, again going almost vertical. I see no reason why investors could not someday in the near future decide that gold and silver are the place to be. At that point, we might see the precious metals vault far higher than we can anticipate today. Remember, during the inflationary 1970s, the price of gold rose from $35 an ounce in 1971 to $850 in 1980, a 24-fold rise. Whether we'll see a similar scenario in the coming years, nobody can tell, but I do believe that the opportunity is there, and all things considered, it does seem very compelling. Now, we can't predict when the prices might begin to move or how fast they will rise. But the one thing we do know for sure is that large-scale price events almost invariably unfold as trends, and trends span time intervals measured in months and years. As gold and silver price trends begin to unfold, we'll see it happen. I am all but certain that iSystem strategies will generate those signals well in time to catch the big moves. Here's how iSystem strategies have performed on gold and silver futures since the start of last year. The top part of the chart shows the price of gold. Below it, you can see the performance of the 12 iSystem strategies in our major markets portfolio. As you can see, the strategies generated substantial gains from the trending moves in 2020, both during the downtrend and the uptrend. They've drifted sideways since last August when the trend stalled. When the price of gold trends again, we will have signals to buy gold and silver in good time. One thing I can say categorically is that in over 18 years that I've used the iSystem, it has never once missed a trending move in any of the markets that I follow. With regards to gold and silver, we track them in 3 different portfolios: metals, major markets, and USA Plus. The subscription rate on this last one is only €250 per month, and we're currently offering it at half that rate, thus €125 per month. You'll find more information about iSystem Trend Compass on our website, isystem-tf.com. To sign up for a 1-month free trial, please email us your request to the address specified in the description below this video. Later this week, I'll be joining Renegade Inc. program on RT Television and the Geopolitics and Empire podcast for discussions related both to markets and geopolitics, so you might want to keep an eye out for that. Thank you once more for joining me at the Markets, Trends and Profits channel. If you appreciated this content, please give this video a thumbs up and consider subscribing to the channel so you don't miss reports like this in the future. Until the next time, be well, stay free, and I'll see you soon.